Most people think they understand retirement accounts like 401ks, IRAs, TSP, 403b plans, specifically in stocks, mutual funds, bonds, or even annuities. Here's the uncomfortable truth. Most retirement money today is exposed to paper. Let's slow down for a second and answer two simple questions. What is a Gold IRA, and how does a Gold IRA actually work? Let's start first. A Gold IRA is not a new loophole. It's not a gimmick, and it's not a bet against America. It's simply a self-directed individual retirement account that allows you to own physical gold and silver instead of just conventional paper assets. You can have that inside a tax advantage retirement structure. The same exact rules apply like your existing retirement accounts. From tax treatments to distributions and contributions, everything is the same. The only difference is exposure. And here's why that distinction matters now. Most traditional retirement accounts are filled with assets that depend on something. For example, a functioning financial system that keeps its promises. For instance, stocks need earnings. Bonds need repayment and they're exposed to interest rates. Funds need liquidity. Real estate, rental property, needs a paying tenant. Annuity is dependent on an insurance company. Gold doesn't need any of that. Gold is simple, and it's the only asset that doesn't need any of that, and its value does not depend on something else. This is exactly why governments hate it. Wall Street is not telling you about it, and neither is your bank, because gold tells the truth about value. It exposes the games the government plays with money. Gold simply exists outside of the system. That's its role. So let's talk about how does a Gold IRA actually work. It's a 3 simple steps. First, you open the account. When you open a self-directed IRA through an IRS-approved custodian, what's a custodian? Custodian is not going to sell you the gold or silver. They're simply going to administer your account. They're going to do the IRS reporting for tax purposes, for your contributions or your distributions, and they want to make sure that everything stays compliant, especially when you can only invest in IRA-approved product. Think of the custodian as the rule keeper. And just like any IRA, you can select a pre-tax base account like traditional or SEP or solo 401k, or an after-tax account like a Roth IRA. You will always have 24/7 access to your account. You will receive your quarterly statement. You can list your beneficiaries. Again, the only difference is this. Instead of having some paper assets, you'll have the actual physical. Second step is to fund your account. The only way that you can move money into an IRA is either by transferring or rolling over from an existing account, or you can contribute based on your age and the allowed amount. See, the transfer is not a taxable event when done correctly. There's no penalties, there's no forced liquidation. It's a simple repositioning of assets. And this is where the psychology matters, because most people hesitate during the transfer process, not because it's complicated, but because it involves making a change. And let's face it, change feels uncomfortable when you don't know what you're doing. But staying put is riskier considering what's happening to paper. Third, let's talk about what happens. Once your account is funded, this is when you select the metals. This is where education matters more than hype. The reason why the IRS only allows you to invest in products that meet the minimum purity standard, such as 99.9% for gold, 99.9% for silver, and 99.95% for platinum and palladium, so that way it ensures that the products are liquid. When you're going to buy and sell it, there has to be a broad market. Unlike numismatic coins have such a small market. Now, the other thing to keep in mind, the IRS had made an exception. The exception is on the American Gold Eagle. The purity of the American Gold Eagle is 91.6%. In other words, it's a 22 karat. But that is the only product that is below the threshold of 99.9% purity is allowed to be invested in a Gold IRA account. Selecting the metals is not about excitement. It's about function. When you purchase the metals, they will be delivered to an IRS-approved depository. The depository will insure, audit, inspect, and store the metals in your name, not on a bank account, not in a brokerage vault, and not in your home. That separation is very much intentional because retirement money is meant to be protected from impulse interference and short-term emotion. You still own the metals, you still control the account, but at first they're held at a facility, a third-party entity that actually validates that your dealer is delivering the right accurate product and reports to the custodian so that way when you log in online, you can see the list of your account by product, by quantity, by ounce, and the values. So what's a depository? A depository is a facility where all they do is store gold, silver, platinum, and palladium. Why do you need it? Now, within an IRA, at first, the metals have to be delivered to a depository because when the metals are exiting your account, that triggers a taxable event. In other words, it's a distribution. The role of the depository at first is to store your gold, silver, platinum, palladium. But before they store it, like I said, first they have to audit, they have to inspect, they have to validate, and based on that, they will insure it for your benefit. Simply put, the depository's role is to actually validate that the product are in your account. Now, here at Allegiance Gold, we work with the most nationally recognized depositories. We're not affiliated to them. We have no relationship in terms of ownership. As a matter of fact, you want a separate third party auditing and validating the role of the dealer. When a dealer delivers the product, you have the depository validating the work. So who do we work with? We work with the most nationally recognized depository. Number one, you have the Delaware Depository. They currently have 2 locations, and they're in the process of opening a third one. Their main one is in Wilmington, Delaware, and the other one is in Boulder City, Nevada. By the way, every depository has the same type of insurance through Lloyd's of London. It's a like-to-like product coverage. See, the depository insures against what? Natural disaster, terrorist attack, theft, anything that you can think about. If you want to have a peace of mind that your gold is there, you can actually schedule a time to visit, but you need to provide an advance notice. You need to give him your driver's license or your vehicle license plate number. And by the way, we can always help you schedule that appointment where you can actually go and see your products. All these depositories have the strongest insurance through Lloyd's of London, up to $1 billion per occurrence. Yes, it's much larger than the FDIC insurance because all they're doing is storing the physical product. They're not insuring against your deposits. They don't even accept deposit. The only thing they accept is gold, silver, platinum, palladium. The second depository that we work with is IDS, International Depository Services. They have a location in Dallas, Texas, and they have a location in Delaware. The third depository that we work with is Brinks. Brinks has a location in Salt Lake City, in downtown Los Angeles, and in New York. The fourth depository that we also work with is Texas Precious Metals location in Shiner, Texas. When you're thinking about the depository, what matters to you are 2 things. Number one, how close is the depository to me? For instance, if you live in the East Coast, you might want to consider having your metals closer to you. So when it comes time for shipment, A, it will be cheaper, B, it could be faster, and C, if you want to actually go in person and see it, you can always make an appointment. Second, every custodian works with a different depository. Here at Allegiance Gold, we are agnostic. We work with all the nationally recognized custodians from Strata Trust, Equity Trust, Horizon, Gold Star, you name it. What matters to you is this: where do I want my metals to be stored? Because when it comes to selecting a custodian, more or less they're the same thing. Think about when you choose which institution to bank with. You might prefer, let's say, Bank of America over Citi, over Wells Fargo, because it might be very convenient. Maybe it's down the street from where you live. Or you might prefer a regional bank. You don't want to have the exposure to a large national bank. Or you might even like a local community bank or some sort of a credit union. When it comes to banking, it's a commodity type of a service. It's the same concept when it comes to the custodian. The custodian's role, like I said earlier, is to simply to do the IRS reporting on one side and make sure that you are compliant from a tax perspective along with what you're investing in. So when you're thinking about which custodian and depository to select, what I typically suggest is to actually determine which depository you want your metals to be stored in. And as a result, select the custodian that works with that specific depository. This is where relationship matters, folks. When you work with Allegiance Gold, we provide you all your options. We give you that transparent information where in advance you have the ability to compare Equity Trust versus Strata Trust versus Horizon versus Gold Star. All of these depositories have an annual flat fee. It's typically about $225 based on the 2026 calendar year. $100 of that goes to the depository, and $125 goes to the account maintenance. Now, within your IRA, you have two options of selecting of how you want the storage. There is something called commingled, and there's something called segregated. What is the difference? Think about segregated having your own actual small box within the depository, and think about the commingled as having your metals somewhat combined with other people's metals. Now, at the end of the day, you still have that gold American Eagle, silver American Eagle bar, whatever the product is, very much specific to yours. The only difference is the year or the type of bar would be different. Now, typically, if you're looking to pay less, and depending on the product that you're investing, sometimes the commingled makes sense. But some clients actually preferred the segregated. The segregated storage is slightly higher. Instead of the $100 per year, it's about $150. Depending on the amount that you're investing, sometimes it makes sense to pay that additional $50. Why? Because the benefit of the segregated is it's yours and it's not combined with anything else. You eliminate any credit risk, you eliminate any exposure from a different dealer, from a different individual. So if your account is typically more than $50,000, it's actually suggested for you to consider having segregated. Now, with that being said, when it comes to the depository, to wrap up, what matters to you are two simple things. Number one, where is the closest depository to where I live? And number two, what are the overall fee structure? Once you select that, it will help you select the right custodian. So now that you know what is a gold IRA and how it works, let's talk about what does it actually do for you. It simply introduces a counterbalance. When paper assets rise together, bonds, stocks, mutual funds, they also fall together. See, gold historically behaves differently, especially during periods of inflation, currency pressure, and policy uncertainty. See, this is not about replacing growth assets. It's about reducing regret. It's about balancing, because the subconscious mind is far more motivated to avoid losses than chasing gains. That's not an opinion, folks. This is human behavior. So in a nutshell, a gold IRA does not promise you an upside. It offers stability when other assets are stressed. And that stability creates something most portfolios lack today: peace of mind. Let's address the biggest misconception. A gold IRA is not a prediction that the system will collapse tomorrow. It's not about the reset or this recalibration. It's an acknowledgement that systems evolve and that preparation feels better than reaction. Every major retirement regret sounds the same. I don't think anything would happen to the dollar. The market is doing great. my retirement is up. I don't think the banks would ever need to be bailed out. See, gold doesn't eliminate risk. It simply redistributes it and minimizes the impact when things go as planned, and minimizes the impact when things don't go as planned. See, think of gold like a seatbelt. You don't put on a seatbelt because you plan to crash. You don't buckle up because you're pessimistic. You buckle up because you understand reality. See, most days the drive is smooth, music is on, traffic is moving, and everything feels fine, just like right now. But if something unexpected happens, one bad turn or one sudden stop or one moment you don't see coming, that seatbelt doesn't prevent the accident. It simply prevents the damage. Gold works the same way. It's not there to predict the crash. It's there so one event doesn't turn into a lifetime of regret. And here's the funny part. No one gets in a car and says, relax, I'm a good driver. I don't need this. Yet financially, people say that every day. Gold isn't fear, it's foresight. Because when things go wrong, the only people who regret wearing a seatbelt are the ones who didn't. And for many people, that seatbelt, or think about the redistribution, restores a sense of control they didn't realize that they lost. So if you're asking whether a gold IRA makes sense, the real question isn't about gold. It's about exposure and concentration. And how comfortable are you having your future tied entirely to a promise made by someone else? If you want to understand how a gold IRA fits into your portfolio or situation without pressure, without hype, the next step is education. Because clarity creates confidence, and confidence creates a better decision. And the decisions you make before stress arrives are usually the ones you're most grateful for. If you want to learn a little bit more about gold, to determine if it's the right fit for you, why it matters, why is it a good idea, how much should I consider doing? Should I use a retirement account? Should I use my personal funds? Where should I store it? At home, at a depository? And I'm certain you might have a lot more questions. If you're looking for no pressure, education first type of an approach, click on the buttons below, either book an appointment, request your information, and comment on what you'd like to learn more about.